If you feel stuck in trading and you don't know what to do, well then this is probably a video that you should watch, because I'm about to reveal how trading all started to click once I found out this one thing. I will also go over some of my key concepts that really took my trading to the next level and a much more profitable state. At the end of this video, I have a special treat for all of you, so stick around and let's dive right in. Just a little background about my trading journey. I started with trading penny stocks to large cap options and now trading the futures market. I've hopped around from strategy to strategy, mentors to gurus, blew up multiple accounts and gambled my way thinking that I was going to be the next day trading millionaire. I've technically started trading in 2017 for about a year or two, but honestly I can't even say that I was trading because I was just hopping onto different strategies without really giving one strategy a chance. Coming back to trading after taking a break in 2019 until this year, my view on trading has completely changed after realizing this one concept of price action. I realized that all the strategies out there, ICT, supply and demand, support and resistances, moving averages, or whatever the heck indicator that people use to become profitable are all just the same thing, which is identifying balance and imbalance in the market. That's it. Once you understand balance and imbalance, trading just gets 100 times easier. It certainly did for me, and after I explain it to you, I'm confident it will help you as well. So what is balance and imbalance in the market, and why is it crucial to understand this? To make this simple to understand, let's say we have a stock that is currently trading at $10. But in a stock market, obviously there are buyers and sellers. What does this mean? It means that there is always a limited number of shares sitting at certain price points. So there may be 10 shares available for sale at $10, and there could be 5 more shares available for sale at $15. So why does the stock price move? Well, there are so many reasons why a stock price moves, but the concept is simple. If there are 10 shares available for sale at $10 price point, but there are 15 buyers who want to buy the stock, then those 10 shares will be sold for $10 first before the next best price gets filled. So 10 buyers got the stock for $10. Now we have 5 buyers who want to buy the stock. Because the shares at $10 are all sold out, the next seller might be selling for $11, $12, $13, $14, 15, so on. So now the 5 buyers have to continuously find the next best price at those price ranges to buy the stock. And that is why the stock price moves up, creating this imbalance in the market. So the imbalance is just when there are not enough shares at a certain price, which causes a drop or increase in the price. Okay then, why does the stock price go down? It's the same thing. If we have 10 sellers and only 5 buyers, then sellers would have to sell the stock to the next 5 buyers at $10. Then the next 5 sellers would have to sell for a lower price because no one is willing to pay $10. So we continuously go down in price until we reach an agreement of price between the buyers and sellers. That's when we have a consolidation, also known as balance in the market. Hopefully that makes sense. Now, once you understand this key concept, we can apply this to any strategy, whether that's supply and demand or ICT. When the price is consolidating and is balanced out, you do not want to get in a trade because we have no direction. But once the stock gets out of that balance, the stock will generally try to fill the imbalance. Let me show you what I mean on a chart. Okay, so here we have the MNQ or the Nasdaq 100 chart pulled up. I have the 5-minute on the right and the 1-minute on the left. And here you can see on the 5-minute that we had a nice price going up and then coming back down to this 14,271 level. Now, why did that happen? Well, on the 5-minute, you can't really tell because there's no real balance that you can spot out. However, if we jump on to 1 minute, you can see that from the starting point of this 5-minute range, there is this nice balance that formed on a 1 minute. So we can draw the box like this. Okay, so you can see that as soon as we started breaking that 1 minute balance area, that's where we're gonna fill this entire imbalance in between up to this point on the 1 minute However, on the 5-minute, we have a huge imbalance all the way up to this point. We can also draw this trend line coming down, something like that. And once we break out of this balance breakout and the trend line, we can see the price just heading higher and higher until we fill this entire imbalance, which stops here, as you can see on the 1-minute cursor and the 5-minute area around this key level. Then what happens here? Well, we form another balance that looks something like this, from this area to this area, and you can see all these wicks showing the heavy selling pressure. And once we break out of this balance area to the downside, we can fill this entire imbalance below on the 5-minute. We can see us breaking out of this balance area and then heading towards the bottom, coming all the way to fill this imbalance to this balance area that we formed earlier, and you can see that on the 5-minute as well. And then from here, we can kind of see that it consolidated, moved up a little, and then started breaking down a little more. And that's how balance and imbalance works. And if you understand this, it will truly take your trading to the next level. Now that you understand this concept of balance and imbalance and how it affects the stock market prices, you can incorporate this in a simple balance breakout strategy, which I currently use to trade the market. I'll be starting a series of passing a prop firm challenge tomorrow. So if you want to follow my journey, then subscribe for that. But meanwhile, maybe check out my current e-commerce challenge if you're interested. Thanks for watching. Peace.